Okay, so this video is more of a beginner video, is to bring some clarity to the chaos of the markets, because when you're looking at those candlestick patterns, there's a lot of noise. And it makes it difficult to understand. So this one's just market structure, the rhythm of the market. So you've got three different areas that the market can be in, right? It could be a bullish market, which is going up. It can be consolidating, which is going sideways, or bearish, which is going down. So the market likes to make pushes up. Then it'll do a retrace. Then it'll push up again. Retrace. Push up. Then might do something like this. Where it starts to trend, or not trend, sorry, consolidate before it finally breaks structure. It does the same thing, it starts making retracements into this bearish trend. So this would be your bullish trend, or your uptrend. This would be your consolidation or movement sideways. And then this would be your bearish trend. Bearish trend. Okay, now when the market's in a bullish trend, you want it to be making higher highs, higher high, higher high, higher high, higher lows. That's what you want for a bullish trend. It cannot be closing below previous structure, or it's no longer in that trending market. Once it closes below here, you've reached a new low, and that kind of breaks apart the market. But just for these purposes and keeping it simple, right? Higher low, higher low, higher high, higher high. And then up here you've got your consolidation, where the market really, once it gets to the top of a push up or push down, it'll tend to consolidate. And then that's where you'll have more or less support and resistance. It's making highs, goes down, makes a little low, but it's not actually breaking any structure. So it's not actually doing much of anything. And then you finally have your push down here. When you get into a downtrend, right, you've broken previous structure. That's how you know that, hey, this is an area I might be looking to get into a trade. So in order for this to be valid, you need to have lower highs, lower lows, right? That's how you know you're a trending market. Uptrend, so you know you're in. This is how you'll know you're in your downtrend, right? With your trend lines, that's where they also come into play. Right, so that's just a quick video basically on market structure. You need to be basically making sure you're using whatever time frame you're on. You just stick to that time frame if you're looking at market structure, because this will look completely different on a different time frame, whether higher or lower. So when you're trying to figure out market structure and you're looking to get into a trade, you could be what they call a reversal trader, right? Instead of make it look like you're not trading with the trend when you are. I'll just kind of give an example. If you were to look at the weekly, like here, you'd be saying, oh, I'm going to reverse here. I'm going to be a reversal trader. But if you looked at, say, the weekly of this, and overall this pair is going down, right? So this push up was really just a retracement, and now you're actually following the trend of a weekly, which will be obviously way more powerful. The higher you go, the more accurate you'd be getting in on a push down, right? So just make sure you got your higher highs or your lower highs, lower lows, and just kind of try to understand where your consolidation is or your ranges. And just as long as it's not breaking structure, like there's so much more to this, but I don't want to get too in depth for a beginner video. But basically, higher highs, higher lows, ranges, lower highs, lower highs, lower lows, lower lows. That's what you need to have either a bullish trend or a bearish trend.